One, two. Hello, 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 hello. I hope everyone can hear us. We're
Two.
almost ready. We're getting ready. It's just a few minutes, and we're going to be live today. We will definitely be trying to share some knowledge in the area of dealing with financial literacy. We're almost ready. We're getting ready on a few minutes, and we're going to be live speaking some today. We will definitely be and some on investing. So we're just finishing up some things. So we're asking you now just to get the link. We're ready. We're getting ready on whether you're on Facebook, whether you're on YouTube, whether you're using the physical link, and someone asking you to share it. We're just like and sharing up some friends, send it in a text, WhatsApp, just to get the link. We're ready. We're getting ready on whether you're looking at the chat on today. We'll definitely question and someone asking you to share it. We're just like and sharing up some friends, send it in a text, WhatsApp, just to get the link. We're ready. We're getting ready on whether you're looking at the chat on today. We're getting ready. Definitely question and someone asking you to share it. We're just like and sharing up some friends, send it in a text, WhatsApp, just to get the link. We're ready. We're house, whether you're right. So we're excited to be today, but we're definitely questions that you can ask. We're just like inspiration. We're taking our text, WhatsApp, just to get the link. And just to help in the house, whether you're right. So we're excited to be today. I do believe that questions that you can ask. We're like inspiration. We're taking our text, WhatsApp, just to get the link. And just to help in the house, whether you're right. So we're excited to be today. I do believe that questions that you can ask. We're like inspiration. We're taking our text, WhatsApp, just WhatsApp in a DM, whatever. Go ahead and share it because we're really excited today just to speak some more on this topic. So we're getting ready to war against financial illiteracy. Amen. All right, so give me a few minutes and we will definitely go ahead and push forward in that area. We're really excited today just to speak some more on this topic. So just give us a few minutes, give us about 5 minutes or so. War against financial illiteracy. Amen. All right, so give me a few minutes and we will definitely share it. Go ahead and share it. Comment on it. We're really excited today. So are getting ready. Just are getting ready. So we are getting ready against financial illiteracy. Amen. All right, so give me a few minutes and we will definitely share it. Go ahead and share it. Comment on it. We're really excited today. So are getting ready. Just are getting ready. So we are getting ready against financial illiteracy. Amen. All right, so give me a few minutes and we will definitely share it. Go ahead and one, two, 1, 2, mic check, mic check, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 1, 2, 1, 2, 1, 2. One, two, one, two. One, two, one, two, one, two, one, two. Listening, we're having a little technical difficulties. Let's see if one, two, one, two, one, two, one, two, one, two, one, two. One, two, one, two, one, two, one, two, one, two. One, two, one, two. Everybody hearing me good? All right, we'll be starting shortly, just a few minutes, and we're going to get the ball rolling. We appreciate everyone coming in. Again, I'm asking you just to like and share. We want to make sure everyone gets this information. And feel free, when questions, you want to have questions, you can drop them in the chat, and we definitely will do our best to address all your questions and concern. Our first session, our first part of the session today, it will be credit. It will be dealing with credit. It will be dealing with the fundamentals of credit, and we're really excited to dig into that and just offer some clarity in the area and see if we can grow together in that area of credit. We'll follow by answering questions and concerns, anything that needs clarity, and then we're going to dig into business, the fundamentals of starting a business, and we're really excited about dealing with this today. And we're going to close out with the fundamentals of investing. So we're really looking forward to it. I hope you are too. And I'm asking you again, feel free to like it, share it in whatever group you think, and text it and send it to whomever you think it might be a blessing to. Oh, yes, we're excited, we're excited, we're excited. I hope you're excited as I am, and we're definitely getting ready now to just kick off, just to really kick off and have a wonderful time. I oh, praise the Lord, I'm getting some requests for the link, and we're going to be sending the link. Uh, we're going to be sending the link. Um, we're going to be sending the link. I'm asking everyone to share on Facebook. Can we just make sure we are indeed live on Facebook? Everyone's seeing the live okay. Everyone's seeing the live okay in YouTube. But there is a direct link, and that direct link also enables you to ask questions. We have some folks that is assigned in the system that they can answer it, so they can go into our Subsplash system and answer those. But definitely ask your question. Ask your questions. For the weekend, we're going to be live on Facebook and YouTube. We're going to be live. We're going to be live as well. We're going to be live as well. Thank you. Multitasking. The questions are covered in just to see where the link and where they could get it and everything. So now that I shared that, I got out of the way, the team in the back, they are sharing it as well, and everyone is able to get that information. So I just want to welcome you again. I want to welcome you. Just want to thank you for joining us. Thank you for coming and really joining us on this evening for this purpose. Just so that we can come together as a family and share on some important things. Oftentimes, we war against everything else other than this idea that it's okay to be forever in lack and to be poor and to not understand finances and not understand how to manage it well. Oftentimes, we have not a lot of issues accumulating wealth, but we have a lot of issues where in the area of actually maintaining and having our wealth grow. So oftentimes we don't care so much about a budget, and we don't care so much about putting certain things in place. But without those things, you're always going to have to be working for money, and your money will not be able to work for you. So we're going to have a little conversation on today, and hopefully we could share some insight so that you can gain some knowledge, you can grow in understanding, so when wisdom protests, you will be able to embrace it. So I'm really looking forward to this, and I'm really excited. I'm really excited just to have you guys join us on today. I'm really, really excited about it, and I'm looking forward to sharing in-depthly about these things, just laying out some real fundamentals and some information that you'll be able to navigate, or we, rather, will be able to navigate these waters. Thank you again, and thank you again for joining. So right now, we're actually going to go ahead, and you can look at the screen, and you'll see now, our first session, we have come together, and this is a three-part session, and we scheduled the time slot from 4 to 6, just that we'll be able to address all the questions and everything. We don't know if it will be that long, but we don't want to go ahead and rob you, so we want to make sure we share richly in each area and give you an opportunity to ask your questions, an opportunity that we can, in fact, share this information with you. So you should be seeing a screen with that information up there. You should be seeing that this actual event, we're having our Armed and Dangerous Conference, and our Armed and Dangerous Conference, it is sponsored by our Impact Youth and Young Adult Ministry, which is led by Minister Anissa Smelly. And we're really excited for what's going to happen tomorrow. And you can see in conjunction, of course, our church. And there is a business that is sponsoring behind it called Impact Wealth League, which I'm a part of. And we're really excited just to share on today. So I'm looking, and I should be seeing the slides on the screen. I should be seeing the slides on the screen, and just that you will be able to see what we are actually jumping into and just everything going forward. So today we're having a financial literacy encounter. Financial literacy encounter. Three things we'll be covering. First part, we'll be covering the fundamentals. We'll be covering the fundamentals of credit. And that will be our first part. We're going to jump in, we're going to dive in, and we're going to really get into speaking on the fundamentals of credit. I don't know if you're excited, but I know I'm excited, and I'm really looking forward to even just sharing in this vein, in this topic. So yes, the fundamentals of credit. We're going to just go and jump right in. Look on your screen. You should be seeing now a diagram. And this is laying out how credit is broken down. So credit is broken down, and 30% of the amount of credit when it comes to your credit score, because credit is breaking down by a score system. And it's vital and important that you know how that score is developed, how it is scored by the various systems, by the Vantage system and by the FICO system. And while there are different groups of scores, meaning that there is the FICO 9 and the FICO 8 and FICO 7. We're not going to get into deep on that today, but there are different levels of credit scores for different things. So there's a different FICO rating that's used when you're acquiring a house, and that is not necessarily the same one that's used when you are acquiring or getting a credit card. So another time we'll get real deep down, but now today we just want to break down the fundamentals. So yes, amount that you owe, 30%. 30% of your credit score, your entire score, it's based on the amount of debt you are carrying. Another 35%, which is the biggest thing affecting your credit, it is actually your payment history. And then the next thing that's big affecting your credit, it is actually your credit age. And we're going to get into these things a little bit. And then lastly, it is the variety or the difference in credit or the diversity of credit you have, and which is 10%. So we are getting ready to start out. And the first thing I would like you to know is that credit is not cash. I know they said a lot of different things when you got your first card, and oftentimes some people believe it is free money. But to simply put it, if you're only buying something because you can use your credit card to do so, I would say do not buy it. If the only reason you're going to be able to acquire that thing, it is because you are using your credit card, then like I said, do not buy it. There's right ways and wrong ways when you're coming to using your credit card. And one thing you need to understand, that it is not money to be used that you don't have. So just because they gave you a 10 grand credit card doesn't mean you need to go get some Gucci and some Ferragamo or whatever. Like, hold up now. While you have that spending capability, as you see before we even jump in it, the breakdown of things, how much you carry, how much you use, all of that's going to affect your score. So we want to dive in and just go right in. The first slide should now be up, and it should be dealing with your credit. It should be dealing with your credit history, your credit Well, okay. The first slide is up. It's dealing with your credit age. I started out the gate explaining that your credit age deals with about 15% of your entire score. So credit age, to easily break it down, there is a slide there, and I'm asking you can go ahead, you can screenshot it, you can write it down. The information is there, and it will be there as I'm yet just sharing in this area of your credit age. So your credit age, it deals with how long you have credit. But not only that, every time you open a new card, then it starts speaking of what they call your average age. So it is important to know that you don't need to be just opening cards just because you want to open cards. So in this area of your credit age, this is what I would share deeply in this area. If you have a child, the best thing to do is to start billing credit for that child now. Now. How do you do that? You want to add that child on your credit as an authorized user. So if you actually add that child on your credit as an authorized user, that child would in turn start to inherit your credit. Now, one thing I want to say, just make sure you're paying your bills on time, you're not doing anything crazy with your credit, you're taking care of your credit score, because this child now is getting an opportunity to stand on your shoulders and get a boost in that area that they can gain from your length of credit. And the length of credit, like I said, it determines about 15% of your overall score. So it is very, 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 very important to start billing credit as soon as possible. As soon as possible. So you can add them whether you are with American Express. And a matter of fact, American Express is an amazing one you'd want to have your child on. And you do not have to give them a physical card. Some credit card companies allow you to add them and you don't have to even request the card. Some require you to request a card, but you get the card, you put it up, you cut it up. Some companies even assign a whole different card number when it comes to which each individual you add. Now, I want you to understand, I'm not telling you to add people to your credit and just go ahead and add them and give them a card and let them go run free. No, that is not what I'm telling you. I'm trying to make sure I stress the importance of understanding how to use this to grow your personal credit. You can also have someone, a parent, a friend, and you can have them where they could add you on a card as you're in this billing journey, and you will inherit the age of their credit. It gets a lot of tricky because people are overdoing it, but it will help you to have some age on your credit, so it won't just show, hey, they have a credit card from the 1980s or from the 1990s. You can inherit that as part of your average credit, so when you get a credit, it's not just, 1 year. You'll have some years behind your name. And we're going to move on to the next slide. Well, I thought you were seeing this. I will just go back over it. Having a long track record without any major issues suggests that your credit behavior will be the same or similar in the future. Lenders, credit card issuers, they love this. This looks amazing to them. So when we look, the biggest term I just said about it, the average age of your credit. And that's something that is speaked on. You will see it if you look at any variation of your FICO score or your Vantage score. And it's different. Your FICO is different from what you get when it comes to Credit Karma. Credit Karma give you a Vantage score. But it still can give you a nice reference. And you divide the ages of your credit, the oldest to the newest, and the total number of accounts, and that's how they get the age of your credit. So let's move on to the next. So if you only have one account, if you're not on anybody's account, if you're starting fresh, they're literally gonna just say your average credit, you have a credit card for a year, it's gonna be a year. But if you have a credit card for 2 years and then you open a new one, it's going to say your average is a year because they're going to divide it by the amount you have. Just to simply put, and just to let you know, if you're in the chat, if you're on the website, any area, you can go ahead and we're going to put an email up there that you can email us if you want us to send you some notes from today and the slides from today. So we will go ahead. A matter of fact, you can go ahead and DM us with your email address, your information, that will be able, so you'll be able to get all this richness in the slides that you can go over it, because everyone learn a little bit different. Everyone embrace that journey a little bit different, but you'll be able to get that raw information that you can process it in your own time. So the next slide, we're going to go to the next slide, yes. And it shows credit score, speaking of payment history. This area is actually the biggest chunk. If you look up there, you will see that it says 35% of your credit is taken up when it comes to how you pay. You could miss one payment and it will drop you from 100% of on-time payment to 90%. So you listen, you don't want to miss any payments. You don't want to make any late payments. You want to reach out, even if you gotta pay your minimum, or reach out and have something set up with them. A matter of fact, if you're in Florida now, because anywhere this hurricane really went, but if you're here now and you're worrying about having some issues in this area, most credit card companies, because of what FEMA is doing, they're allowing you to skip October. Not even just if you were up north, if you're in anywhere in the state of Florida, you're able to skip October payment if you go ahead and request it, and they set it up. You'll get to skip the payment, and you won't get a late fee or anything. So if you need that, you go ahead and check that out. So 30% of your score. It shows how you have paid your accounts over the length of your credit. So this is why it is so important. Your payment history. If I'm going to extend credit to you, I'm looking at this. So that's why this is evident, or testimony of your repayment. It is the primary reason why your credit history is made up 30% of your score. It is a major factor in calculating your credit score. It is big. It is big. It is big. It is huge. It is vital to understand how important it is. And like I said, it is the biggest thing. It is the key thing. It is the main factor when you're looking at what can affect your score. Make your payments on time. I always say pay more than the minimum. But if you can do at least the minimum, do it. Don't get a late payment. If you already have late payments, I'll tell you this. If you've been paying well for several months and you had late payment maybe 10 months ago or something, oftentimes you can reach out with a goodwill letter or even a goodwill communication, and they will remove that negative hit on your credit, and your credit score will jump back up. So, hey, remember, you can reach out, and again, you can DM me and everything, and I can share some more in that area. But you can reach out to your credit card company, and oftentimes they will do a goodwill of overlooking that. So that way they can report and update it with the credit bureaus. That way you don't have to stress and worry about that, and your score will jump back up. So we're going to move on to the next area in what calculates your credit score. My apologies. The slides are out of place. This was supposed to go before the other one, but I just went over this and I was sharing how, in fact, the payment history, so the slide is in front of you, you can look at it. This is the killer when it comes to your credit. This is a big killer of your credit score. Payment history, I can't echo it enough. It will kill your score big time when it comes to late payment. So remember, pay attention, set your stuff up on auto pay. and communicate with your financial institution rather than just dodging them or not making payments. Amen. And when it comes to your mortgage and stuff like that, you normally get like a 14, 15-day grace period. So make sure you communicate. Make sure you take up and use that. We're going to go to the next slide. We went over that. We're going to go to the, all right. We went over that. It's all right. We had a little technical difficulties, so some of the slides are a little bit clumped up. But if you can get me utilization, we will come back to how closing cards can hurt your credit. But I want to deal with just the percentage of the breakdown of your credit. So we have in there where it talks of 30% of your credit dealing with credit utilization. So if you look, there should be a slide in the mix and in the layout. So we want to get to that slide. So far we covered average age of your credit, and we have covered payment history. Average age is 15%, payment history is 35%, and then we're going to deal with the account types, and we're going to deal with utilization, and we're going to deal with inquiries, and then I will start talking about why you shouldn't close your card prematurely, or you shouldn't close your card when you're just not using it. If you have it and it has good age on it, it is smart, it is intelligent, it is a wise decision to keep that open. Okay, while we have this graphic, you can go ahead and let them see the graphic, the breakdown, and I'm going to speak on the different areas as they're looking at the breakdown. So and again, make sure you DM us that we can send you the notes. We have a little technical difficulties and some of the slides are not coming up, but we're gonna speak on debt to credit ratio, dealing with your credit utilization. So if you're looking at this chart right now, you will see it speaks of the amount of credit owed. It takes up 30%. And 30% is the second largest effect on your credit score. So you keep looking at the graphic, and I'm just going to talk to you about it a little bit since we don't have the slide to show you, but we will send you the notes that will break it down wonderfully. So your debt to credit utilization rate, or debt to credit ratio, or credit utilization rate, it is all the same, it's just different wording, but it's extremely important. It takes up 30% of your score. Generally speaking, it represents how much revolving credit you have been afforded and how much of that you're using. So to put it simple, if you have a $10,000 card, and you're using 30% would be $3,000. Most people will tell you to keep your usage at 30%. Oh, thank you for the slides. Your debt to credit ratio, or your debt to credit ratio, or credit utilization rate are all the same. It is extremely, repeating, you can see it for yourself. Generally speaking, it represents the amount of revolving credit you're using divided by the total amount of credit available to you, or your total credit limit. Next slide. Okay. Revolving credit accounts including things like credit cards, retail store cards, line of credit. Before I go any further, you're looking at this list, you're seeing this list. I need you to look at this list and understand it clearly. So a credit card account is different from a charge card. So we can use American Express will be the best example of that. So it's talking about revolving credit amounts. If you have a platinum card, if you have a gold card or a green card with American Express, those are charge cards. They do not necessarily have a limit. They have a line that's normally assigned to you based on your relationship, your spending, and paying back. Those cards are normally due every month. I know they have interesting things, but charge cards are due every month. That will not affect your credit to debt ratio like how a regular credit card will. So a regular credit card, so for instance, you can take a Delta American Express, since we're using American Express, and it will have an assigned limit. It will have an assigned limit just like if you have a Macy's card that's not an American Express or American Express, or any other store, Target, it will have an assigned limit. You can look at credit lines, equity credit line, regular credit line. It is different than a personal loan, a mortgage, or a car note. I want to make that clear, just that you can gain in that area. So just to put it simple, any line of credit that's considered revolving, as you pay it off, more credit will become available to you. Installment loans are different. So those are your mortgage, those are your equity loans, car, vehicle, personal or business loans. They have fixed payments each month, and when you pay them off, they're closed. Before we leave this slide, oftentimes people will pay off their personal loans, they'll pay off their car, or they'll pay off their student loans, and we're right in this area, and because it speaks to 30%, your credit score will drop. And you're wondering how I just pay off my student loan and my credit score dropped. Because you didn't get any more credit. You didn't get any more credit, and it's a temporary drop. After, it's going to help your credit because it's going to show that you paid off everything, you were on time, but you're going to have a temporary drop because it's going to be on a closed account and it's going to be removed. So generally speaking, your credit to debt ratio includes things that are not installment loans. They'll look at your mortgage payment and all that when you're acquiring other things in that area. So if you're looking to buy a house, do not go car shopping first. If you're looking to buy a house, do not go car shopping first. I'll say it one more time. If you're looking to buy a house, do not go car shopping first. Stop doing all of these other things with your credit when you're looking to buy a house, because it's going to throw off your credit to debt ratio, your credit age, and everything else. So we don't want that to happen. We're going to go ahead and get to the next slide. Okay, so credit inquiries. And as you're looking at this slide, I want you to understand there are two different kinds of inquiries. Hard inquiries or soft inquiries. While hard inquiries make up 10% of your credit score, soft inquiries does not affect your credit score at all. Before I go any further, you're looking at it. I'll give you an example. You go to apply for a car loan. A matter of fact, remind me at the end and I'll give you a little insight on how to navigate that. But be careful in that area, because you'll have car places that will shop your credit around and you'll get dinged 5, 10, 15 inquiries, and you don't want that to happen. So a hard inquiry would be opening up a credit card or any line or any credit at all, or applying for it, with the exceptions of sometime a card or a company you have a relationship with. So American Express, they'll often use an internal credit report system they have, and they'll do a soft inquiry. and they will not do a hard inquiry, so it will not affect your credit score. And a hard inquiry, and we're going to get down to it, it stays on your credit for 2 years, 24 months before it normally drops off. There's a whole lot of videos of other ways to navigate things. I'll leave that alone. But speaking technically, it stays on your credit for 24 months. Soft inquiry. The best example of using this strategically is with American Express, if you already have a relationship, or with the Apple Card by Goldman Sachs, or the Marcus GMC card by Goldman Sachs. They will do a soft inquiry. They will approve you and give you an offer. A lot of banks are doing this now, but they for sure will do that. If you accept the offer, then they'll do a hard inquiry on your TransUnion credit score. But this is a nice way. You would know what you're approved for. You'd know what your rate is even before. But oftentimes, banks do soft inquiries just to check how well you're doing overall. And sometimes for credit line increases, depending on the bank, they're supposed to tell you by law if it's going to be a hard inquiry. If they didn't tell you or you didn't agree to a hard inquiry, chances are it's going to be a soft inquiry. So when you personally check your credit score, that is a soft inquiry. When you do that with Experian, Equifax, TransUnion, Innovis, and any of the others, or when you do that with Credit Karma, your Vantage score with Credit Karma or any of the others, it is a soft inquiry. Checking your credit score does not affect your credit. You checking your credit score does not affect your credit. Right now, since the pandemic, you can get a credit score, I believe it's every week. I believe it's every week or every month. I'm almost 100% sure it's every week for free. If you sign up with any of the credit bureaus, you can sign up for free, and at the minimum, you can get it every month. And it doesn't count towards your score. So go ahead and check your credit score. Let's go to the next slide. I break down hard inquiries. I break down how lenders use it and request it to see an overall thing of your credit, that they can use it to, hey, do a credit application, increase your credit. Landlords will often use this. There is a credit bureau reporting agency called LexisNexis. They'll often use them when it comes to the area of landlord things. And there is several others, and I'll list them later. So hard inquiries normally impact your score. Having multiple hard inquiries in a short amount of time, it can ding your score heavily, and they're going to remain, for 24 months. And when I talk about a short time frame, I'm talking about within a 7-day or less. Oftentimes 14 to 45 days, it doesn't give you that heaviness otherwise. Let's move to the next slide. Okay, when you are shopping around for cars, I was talking about them as an example. They will oftentimes shop around your credit. You don't want to go that route. I would recommend get a credit union, link up with a credit union. Most credit union now will approve you, and they'll give you a blank check, and you can go be a cash buyer. Although the market is ridiculous now, you can go be a cash buyer, and don't let them shop you around. If they're going to pull your credit, you need to let them know, who am I going to do it with or whatever. I don't want to have 10 different inquiries. And they will say, oh, it's okay. You need to make it clear, because they will do it. And make sure you only do that if you're sure you're buying something, so you don't waste inquiries on your credit. Typically, they stay for 2 years. Too many inquiries on your credit, that will cause you to be decline credit limit increases, and in some extreme conditions, it can cause your accounts to even get closed with certain people if they see you're applying for 20 cards in 7 days. That's just a red flag. Next slide. Okay, so I believe before we touch on this, I believe we covered all the breakdown. So we covered payment history being 35%. We covered credit age being 15%. We covered credit type being 10%, and we cover utilization, credit to debt ratio being 30%, and we covered 10% for credit inquiries. And we're just letting you know, closing your credit cards, especially your older credit cards, it's going to affect your credit to debt ratio. So if you started out with a Target card or a Macy's card or something like that, I would tell you now and again, make a little purchase with it, just keep it. It helps your credit to debt ratio. You don't got to go crazy and spend anything big, but it just helps your credit ratio, and it is a good thing to do because you might have had that card for 10, 15 years, so keep it open, and you might have never had another card for 5 years after that. Let's go ahead. Okay. Don't just go and keep opening accounts. Keep in mind that just opening accounts for no reason, that is extremely problematic, and that will cause you a lot of issues with hard inquiry. It will cause you issues with banks looking that you open Chase, and a few other banks, they have what they call, I think it's the 525 rule. It's the amount of accounts. If you open 5 accounts within a 2-year period, they tend to flag you and look at you interestingly. So do not open accounts if you don't need to open the accounts. Stop allowing the folks at Macy's and Target or wherever, you're not even going to use the card again. Stop allowing them to hit you with, oh, we got this amazing promotion, and they get you. Oftentimes the interest rate on these cards are 25 to 30% interest rate. So if you can do without having them, do without having them. Next slide. Credit card grace period. When using a credit card, it affords you the privilege of a grace period, which is normally clearly stated in your credit card agreement. I know people don't normally read it, but normally you have about anywhere from 21 days to 30 days. So you need to look on your statement, it will make it clear. Unlike when using a debit card for purchase, your money is gone right away when you use a debit card. With your credit card, you still have that capital, you still have that cash on hand. You can, not to say waste it or spend it, but you can be able to cover some things if you need to based on when you get paid. So when you use a credit card, your money remains in your bank, and until you pay your credit card bill, during that grace period time, you do not bear any interest. You do not get any interest. So my thing is you should pay your credit card bill fully off every month. That's how you should approach it. That don't mean things won't happen and you might not have to carry a balance or whatever. But typically speaking, to not pay interest, which is where the big bucks are made, you want to pay off within that grace period. Next slide. Okay, we're going to deal with this. Keep it up. We're going to deal with this. A matter of fact, go back to the last slide. I want to plug this in under this area, grace period. If you learn your credit card, and if you get to understand the grace period of your card has 2 dates you need to know. You need to know your due date, and you need to know your statement cut or generate date. The date on which your statement is generated. Oftentimes, if your statement cuts, say, on the 15th, your due date is going to come after, and your due date is going to be about 21 to 27 days after. Now, while you're paying attention to your statement date, more importantly than even your due date, say you have a credit card with XYZ, and you have a $10,000 credit limit, you used $5,000, you paid it all off, you paid it off on the 15th, and your statement generates on the 16th. When your statement generates on the 16th, you are going to have a zero balance. So after your statement generates, If you know you're going to make a large purchase, and after your statement generates, you go ahead and you spend the $7,500, you're actually now not going to have a 21-day grace period. You're going to end up having somewhere around a 45 to a 60-day grace period, because you're not worrying about anything else until your next statement generating date. So you'll be able to carry that balance interest-free for a way longer time. So look at your statement. They have started making it clear because of laws that was passed in the last craziness we went through. So look at your statement, and it will show you your statement end date or close date, and look at your due date. And this will help you to understand how to navigate using your card wisely. So don't make that big purchase until after your statement date. Let it cut with a zero balance, and then you go ahead and you make that big purchase, and you'll get to carry it for a longer time being interest-free. Let's go to the other slide. Okay, oftentimes we don't talk about safety. When it comes to credit, before I even read this, and I'm going to read it, 9 times out of 10, I do not carry a debit card. Yes, I do have a debit card, but I do not carry a debit card. People that understand the laws that govern wealth and things, and they teach their kids the wealth, they do not carry a debit card. Debit cards often offer little protection if someone stole or used your card. And also, the money leaves right away. And 9 times out of 10, you get zero benefits by using a debit card. So, for protection, for benefits, and for growing and having a better credit score, I would recommend that 99% of the time, do not use your debit card. Unless you go into the bank to pull out some cash, do not use your debit card. You're going to pay your phone bill. 9 times out of 10, your credit card is giving you rewards. An Apple Card will give you 3% if you pay your telephone bill with T-Mobile. You want to use your Apple Card. You're going to pay the bill anyways. You're getting 3% back. Some, you racked up miles. Some, you just paying your phone bill with your American Express Platinum card. It will cover your phone if your phone is lost or stolen. So you want to look into the benefits that you have. So the card would literally extend insurance for free just because you use it to pay your phone bill every month. So safety, that's a big reason why you're going to pay with your credit card, because if somebody skim your card, the other day I went to a bakery. I will not call their name. I went to a Ma and Pa place, and I got me a few patties, and I was traveling, and while I was traveling, I got an alert, said I was spending $250-something at Publix, and I wasn't where any Publix was, and I'm like, huh? Will a man rob God? So I got on the phone, and I called American Express, and we went through a plethora of transactions, and they had racked up almost $600 and something throughout the day already with my credit card. And the lady said to me, your credit card, do you physically have it? I said, yes. She said, it's saying your credit card is physically at the location, so that means they copied your credit card, they skimmed your credit card, and they have a physical copy of your credit card swiping it. So if it's credit card, what's going to happen is this. They canceled that card immediately for me. They expedite me one, and by the time I was back in Florida in about 3 days, I had the new card in my hand. Not only that, all the charges was already credited back to my account. When it comes to a debit card, 9 times out of 10, it's going to take them over a month to even get you that temporary credit. And you got bills to pay, you got things to do. So like I say, use your credit card. It offers a lot of protection. Oftentimes, they'll tell you at least $50 you're supposed to be liable for, but they'll cover everything. A debit card, I think they don't go over $1,000 in certain cases. You might need to read the agreement with your bank. Like I said, forget about a debit card. Use your credit card. It will help from your card getting skimmed here or there or whatever else. So it will help protect you from fraud. And the fraud preventions built into your credit card is better than your bank. They're often better at catching patterns that's unlike you and to shut down things. Next slide. Okay. With your debit card, with these things, even when it's not your fault, it can end up affecting your accounts. And if you're not paying attention to your credit card, it can affect your score. So you want to hear, I said here, you want to pay attention to what's going on with your accounts. Fraud protection, I've spoken in regards to credit versus debit card, but with your credit, you need to pay attention to your credit. You need to sign up with Credit Karma, TransUnion, Equifax, Experian. You want to sign up with them, see what's on your credit, set up alerts. A matter of fact, if you have had problem in this area, you want to go ahead and probably even freeze your credit file. And it's free. That means that you have to unfreeze it when you're going to apply for something. So you want to be very careful watching over your credit, because you spend a lot of times making sure your payments are on time, your average credit is right, all these things I went over. So you want to protect. You want to protect. And the study shows that that the majority of all Americans have negative things on their credit that is a result of fraud or mistake. So you want to watch over your credit. I won't get too deep because we're dealing with fundamentals, but your credit breakdown could cost you thousands with a car or with a house. If you look at the market now, if you got the 2.5% compared to getting in the 6% now, you can easily would have been paying $1,500 on a $250,000 house, which now you can easily be paying around $2,500. And your credit score will dictate the rates that you can get. So you want to pay attention to protect your credit. Next slide. All right, before we go any further, leave that right up there. We're going to go ahead and just allow for a few questions. I know we're running a little bit behind, but I promise you I'm going to share some stuff on business, and we're gonna share some stuff on investing, and we're going to answer some of your questions. So if there's any questions, I'm looking to Chris. He is going to tell me what your questions are. So I'm just waiting to see if there's any questions. They're looking in the chat. So if you're on Facebook, if you are on YouTube, if you got a question, go ahead in regards to credit, and I will definitely address. It would be a nice idea for us to unmute the mic. That way I can hear it in my ears. I find that to work perfectly in times like these. Yes, go ahead. Okay, so the question that came in, the question is that if your utilization is high, should you still add your child now or wait until your utilization comes down? Well, I will answer this in two parts. I'll say this. Now, if the only thing is that your utilization is high, And if your child is not going to be using credit in the near future, so say they're 10, 15, they're not 20 or already you're just trying to kick them off in credit. If you're trying to do it years before, I would say it's okay. If you don't have negative payments, late payments, all that, you just have some high utilization, it is okay. And the reason I'm saying it is okay, because they're not applying for anything right now. So they're going to get that age, they're going to get that boost, and they're going to jump. Now, if your child is at credit usage age and they're actually trying to really start billing credit and you're like, hey, let me just add them that they can get some age, I would say it would be best if you get your utilization down some first. At least try and get it under that 30% utilization mark to have you in a little safe zone before you do that. Just that way it will affect them in a good way. In a good way. I have another question here. It came in via text, so I'm guessing they're using all technology because I didn't see this coming. But we have a question here from one of my little brothers. I guess he's watching up there in West Palm Beach area. He said, how do you go about refinancing if you're below a certain credit score? Your payments are typically or sometime payments are typically late, especially due to... Okay, your payments are sometime late because of the amount you're paying. Without going in too deep, I'm going to be honest. Between last year and the last half of 2020 was the best time to have this refinance conversation because you weren't governed by the regular rules and your credit score didn't matter. And you could get that 2-point-something%. And I'm sorry that a lot of folks missed the boat because you wouldn't have to go through the regular process of refinancing. It was the best time to refinance. Right now, it's probably not the best time just because of what the feds are doing in general with just hiking price ridiculously. Now, if you, by the Spirit of God, find yourself with a financial institution that are going to refinance you with a credit, we'll not even say your credit score, but with most financial institutions, you will need a high 600s to get a good refinancing. So you want to try and get there first. So I would say look at what else is affecting your credit to try and bring up your credit a little bit higher before you even start looking into refinancing. That's what I would do. But I'll give you district. And I want everybody that's connected to take a look at district. When it comes to your mortgage, one of the best ways you can approach it is you can do the 4 or you can do the bi-weekly. And what I mean about that is you can pay your mortgage every week. So every week, say your mortgage is $2,000. Every week you pay $500. What that's going to do is you're going to end up making a whole lot more payments. You're going to end up knocking down your interest a whole lot faster, but also it will help to lessen the burden of that $2,000 coming out one time. So every week, so if you get paid every week, whatever that portion is allocated for your mortgage. So if your mortgage is $2,000, you do $500. If your mortgage is $1,500, you're going to do, well, if your mortgage is $2,000, you do $500. Your mortgage is $1,000, you do that $250 every week. If you can do it every week. If you get paid bi-weekly, then I would do it every 2 weeks. And that will help start knocking that down to get you in up-to-date payments, to get you in a good place that you can even look to refinance. And you might not want to refinance. You might want to look at options of pulling out an equity line, not loan, an equity line of credit, and use that to approach buying a rental property that you can use 70% of the projected income to also put on your income to qualify for that property, and then that property can help you pay for the rental and help you pay the mortgage where you live. So that's a whole nother conversation, and if you're interested in having that conversation, put your information in the DMs that we can know, because we're going to try and do something like this at least once a month where we can have some conversations like this to help us navigate the falls. Amen? All right. So next question. You mean when you say cut off, like where you should stop? Okay. They'll tell you that you have to be 18. That's what they'll say. The facts are you could be just born. Now, let me put it this way. Have you ever heard someone say, oh, my credit is messed up because somebody had put the light bill in my name when I was a child? I don't know. If you ever heard somebody, or the phone bill or something? So that shows that you can be added at any age. So you can be added at any age. Some banks will require you to be at least 18, but a lot of them, it doesn't matter. Your date of birth, your full name, and your social security number. And I would do it right away. So if you put it on that child at age 1 or 5, by the time they're 18, they will have had about 15 years of credit history. And you're putting them, they're standing on your shoulders now, baby. They're up there. So, hey, when wisdom protests, embrace it. Next question. Okay, I think I answered that in the Okay, I don't believe the folks online hear the question. So the question was, even after they pass 18, can you still add them? Of course, you can add them, and it's still a good idea to add them. One thing I'll say is this: it is a smart decision to give your child what I would call an emergency card, but you want to make sure you give them the knowledge before you give them the card. Because if you give them the card without the knowledge, you're going to end up having some problems. And a card like, one of the cards that I'll tell you, if you have an iPhone, it's not the best rewards card, but I'll get an Apple card. Then you can actually have one assigned to your child at a young age. They can have that card to buy little things. You can give them a limit. Most cards, when you add people to it, you can also assign a credit limit. And they can't go over that threshold. So it don't matter what age you are. It don't matter if you're young, old. It is still a good idea to help your child out if you have good credit and do it in that area. We're going to go ahead and we're going to see if we try and grab, okay, I have a question here. The question says, how does one freeze their credit? This question is coming from New York, and it's coming via YouTube. And it says, how does one freeze their credit? A credit freeze, you might hear the term a credit lock, but a credit freeze is free, unlike a credit lock. If you go to transunion.com, you can go to transunion.com, and on transunion.com, it will have you do a free credit monitoring, and it will enable you to freeze your credit. You'll sign up, it'll verify who you are, you can freeze your credit, and when I try or anyone try to access your credit, it is going to kick back. It's gonna rebound right away because of that freeze. They won't be able to actually see your credit at all. So you can't get unexpected hard inquiries or anything. And the same process to go on Equifax. I think Equifax actually has an app. I think Experian has an app for it as well. And I believe TransUnion has an app for it. All of them should have an app that you can do a credit freeze. Innovis, you can do it free online. And again, you need to get the notes, so please shoot your information that we can be able to give you the notes, because I'll break down and I'll share on different credit bureaus you don't know about and how to take a look at them. But you can freeze your credit simply by going to their website or calling their number and asking to be transferred to those who can help you to freeze your credit, and they'll also send you a code that nobody can just unfreeze your credit, and that will stop all hard inquiries coming in from you, foreign or domestic. So you'll have to unfreeze it, whether it be permanently unfreeze or temporary, that you can run your credit. Theory, are there websites that I can use to build my credit if I have no credit at all? I don't have anyone to add me. Okay, this is coming from YouTube. The ice cream theory. I'm not sure who that is, but thanks for joining. And yes. So there, I believe the slide should be there, but if not, I'm going to ask you again to, especially the person that asked this question, I'm going to ask you, please send your information. We have some notes that we can send you to help you in this area. One of the places that I would send you if you're freshly billing credit, I would send you to take a look at this company. They're called Self Financial. They have an app. And you can go to their website. They're called Self Financial, or just Self. They have an app, and how it works is that you would actually get a credit builder loan, and you'll actually pay that loan every month, and that money would be getting saved, a portion of that money, x their fees, and their fees are not high, and you'll be able to do I think they have 3 12-month plans, and they have 2 24-month plans. I would do one of the 24-month plans, but I'll tell you like this here. I think one is like $50 and one is like $80. No. One is $80 and one is $150 a month. I'll tell you like this. If you're going to do something like Self, and Self Credit Builder is one, Kickoff, Kikoff, Kickoff Credit Builder is another one, and Credit Strong is also another one. And I'll just run it back. Self, you sign up with Self. The fees are going to be low. After a certain amount of paid down, you'll be able to get also a credit card from them that is now backed by the loan you have already paid into. So you end up having 2 things on your credit, helping to build your credit. So that diversification will be taking place. So I will tell you to take a look at Self, and if you shoot your email, we can send you links to these. I believe it's self.inc, but we can send you links to these. So you can end up getting an installment loan and a revolving line of credit. Kickoff is similar. They will have an installment loan and a line of credit. They have small amounts and larger amounts, and they have like a little digital store where you can buy digital books about starting business, different things. So you want to take a look at them. Credit Strong, it is a little bit different. It's all about installment loans, and Credit Strong is for personal and business. So you build in business credit, take a look at Credit Strong as well, and take a deep look at them. But they're going to give you an installment loan so they can help you get into a healthy position if you're looking to get a mortgage. Because that installment loan, you ever had nice credit, and then they decline you for auto loan or mortgage because they said your credit is not diversified. And what they mean is that all you have is credit cards, you don't have any installment loans. So yes, so again, Self, Kickoff, and Credit Strong. And that should be able to help you in that area, in that area when it comes to billing credit. If you have a Navy Federal has they have a unique loan that you can do that with. Most banks have credit builder credit cards, Capital One has, but Capital One allow your card to graduate, meaning that it can come a real card. Some banks don't allow you to do that, but you want to look at some banks when it comes to, it's called a, oh man, I'll get the name soon, it's in my head, but it's a credit card that will require you to make a deposit. So, what's that, Pastor Andre? Yes, secure credit card. See, the name was right there. So Citibank, I think they have one from $500 to $5,000. So if you have the money, you put the $5,000 in and you have a $5,000 credit card right away, and most of these cards will be able to graduate, meaning they can become a real card after 12 months or 24 months. American Express have cards in that area as well. So you definitely want to take a look at those options, as well as the options I lay out is the best way to get started. And if you're with a credit union, they have some amazing products. I know Navy Federal has a new product they built just for that purpose. And I don't even think it costs you anything at all with Navy. We're going to take one more question because I want to, the time is far spent, and I want to give you a little bit about business before I let you go, because I know a lot of people came for that, and I don't want to rob you of that. Okay, the question is, what do you do when you're not using your credit card and it's paid off and the company closes it? I would say don't let that happen. Companies that normally do that are Macy's, Target, normally store cards. They'll close it after no usage. So if you know you have store cards and they're some of your older cards, I would say now and again, buy something for $20, $50. But you don't, and normally it's like a 6 months or more period that they're going to close it after that, 6 months to a year. So if you every 3 months or so, you just buy something small, you can, it just shows some kind of usage, and you can even pay it right away to clear it up. But I wouldn't let them get to the point where they close it, because oftentimes, like I said, that's going to ding your average credit, and it's going to bring down the age of your credit. So don't unnecessarily let accounts get closed. Okay, go. All right, so we have dropped, just so you know, the links are in there, the cutoff age. If your utilization high, wait until, okay. Can I decline a credit? Okay, there's a question. All right, since we're here, I promise we'll get to investing. We'll do another session, and we promise you we'll get to investing. I'm going to answer some more of these credit questions, and then I'm going to go through just starting up a business and give you that rich information. And then we'll answer some questions about that, and we will release you. I don't want to take all your time, but I see that people have their questions, and I don't want to abandon them in these questions. One question is, can I decline a credit line increase? Yes, you can. But should you? No, you should not. Yes, you can. No, you should not. Now, let me say this. If you don't have discipline in using your credit card, we will speak first of making sure you have discipline. Once you have discipline, so you gain in the knowledge and understanding, once wisdom now can protest, so you'll use your credit card rise, yes, you want to embrace your credit limit increase. Why? If you have $1,000 in credit line, you can spend, if we're using the 30%, I like to say keep it under 10. But if we're using the 30%, we keep it under 30%, that would be $300. But if it's 10 grand, now that would be $3,000. So you can spend more, keep it under that 30% where it's not hitting your score heavily. Now, if you have a credit card and your credit card is $100,000, you essentially could spend 30 grand and you're still under that 30%. But if your credit card is only 30 grand and you spent the 30 grand, it's showing 100% utilization. The bank gonna look at you funny, might even start looking to, you ever start paying off your card, and as you pay it off, they bring down your limit. because they're like, you taking this thing a little too serious. So they start bringing down your limit. But if you're, and chances are you was offered a credit line increase and you declined it. Get the credit line increase. I would say it's better to be offered than ask for it. But if you want to ask for it every 6 months to every 9 to 12 months, some 6, you can ask for one. But if it's going to do a hard inquiry, let them figure it out on their own if you don't really need it. And with American Express, until you hit like around 15, until you hit 10 grand, you can ask for 3 times your credit limit and they won't look at you funny. So if you have 3 grand, you can ask for 9 and they won't look at you funny. If you paid off your card, paid it on time, chances are they'll give it to you. You don't want to get a financial review, keep your cards under $25,000, and we got to do a little bit more in-depth credit talking to explain what a financial review is and all that craziness. So we answered why you should go ahead and get that credit limit increase. It will help your credit utilization, and it will give you more credit that you can use without getting into that 30% usage that you don't want to have 30% or more of usage. Okay, and if you do those things, it will help to not have your card closed prematurely. Oftentimes, companies that close your card is because they think you're now not paying down enough on time and they're seeing you as a liability, or they're looking as well as your other stuff that might be on your credit. So that will help you from not getting your cards closed out. So I just wanted to address those questions. I don't know if there's any other question right before we jump into starting out a business. Is there any other questions that I missed? I was just looking here. I didn't see any new texts. I just wanted to also plug, I think it's called loqbox.com. Take a look at it. It's supposed to deal with installment credit loans, and it helps you to build credit. So you want to take a look at that as well. Before we move from here, I just realized I didn't say something profound and maximum important. Do not co-sign on any loan, especially student loans. If you didn't hear that, let me run that back. Do not co-sign on any loan, especially student loans. If you didn't hear that, one more time. Do not co-sign on any loan, especially student loans. Try your best to avoid it. Reason being, and I made student loans echo, reason being the parent to student loans is designed to take your house and what you own. It is a debt that you cannot write off in bankruptcy. Our lovely president made sure of that about 30 years ago. Before he was president, he was one of them that pushed it heavily. So you cannot run it off in any form of bankruptcy. You can get certain things, grants and different things to take it off if you're in the nursing field in certain areas of education and you go to the devastated areas. They can help clear up some of that for you. But do not co-sign on the loan. God forbid something happened to your child didn't finish, you still got to pay it. God forbid your child transition early, and we don't want that, you still have to pay it. So be very careful with student loans. But also know, and you're going to be left holding the bag, and they're going to be ready to put a lien on your house. A matter of fact, you got a house, we'll get into it another time, but start looking into a irrevocable trust and start putting your house and all them things in a trust, even though you're going to get a will that you can protect it from things like this. Don't sign for anybody car. Don't co-sign for anybody mortgage. A matter of fact, if you are married, the best thing to do is you buy one house, your wife buy one house. It is our houses, but your house, if you both are under one house, both of you guys will be carrying that $250,000 loan. Most lenders will look at it as $500,000 because they're looking at you guys as one. So you don't want to do that. You do not have to be on the loan for the house, but you need to be on the deed. Make sure you're on the deed. So God forbid you got to go through one of them wild seasons. You're on the deed. so you got ownership and control in there. And we rebuke those wild seasons, but we got to prepare for the storm because hurricanes be coming sometimes. Nevertheless, so remember, do not co-sign for any loan, not furniture, not cars, not house, because you'll be left holding the bag and you can't worry about them. You're going to just have to pay it. So I thank you for that. Like Warren Buffett say, hey, don't test the depth of the water with both feet. So both of y'all don't co-sign for the loans. And hey, look, your husband buy one house, and if you're quoting or you're just going through courtship, it's nice now to they get a house and they get a quad or a duplex, and the rent can be paying, and they live in part. And while y'all quoting, you do the same. And then after that time expires, y'all get married. Y'all will have 2 properties come in income, and y'all have somewhere to live. So let's look into the fundamentals of starting a business. We know it is 5:29, and we are set to cut off at 6. We will go a little longer to answer some of your questions, but I want to go through this business fundamentals, the fundamentals of starting a business. Go ahead and put that slide up that the people can see it. The fundamentals of starting a business. Now, right here, I'm just want to go through some of the key things. So you're looking at your screen. Number 1, research LLC or corporation name. You want to look into the names that you're trying to name your business. Search both state and federal trademark searches, because you don't want to go license and start out a business and get ready to run with it and somebody else have trademark on it, and later down the line you get sued or you get into big problems. So number 1, do that research. Number 2, research a registered agent or have a virtual business address or a physical business address. When you're setting up the business, do not use your home address, and do not use a P.O. box, and do not use UPS store addresses. It is a red flag when you try to get funding from banks. They're not looking at you like you real, the way you should be looked at. So remember, look into registered agent. That will be a company that can handle your business needs. They can often also set up the business for you if you don't want to do it yourself, and their address will be on it to protect your privacy and to have a real business address. Number 3, file with the state articles of organization or incorporation. For LLCs, it will be organization. For others, that's when you're filing an INC, it will be incorporation. Let's go to number 4. Number 4, get your EIN directly from the IRS. IRS.gov. People are charging anywhere from $100, $200, some even $1,000 to get you an EIN. It is free. Like how we say Jesus paid it all, it is that kind of free. And it will take you less than 5 minutes to go on the website and do it yourself. It is almost novice. So the best way, you go on the website and it asks you for why, you just simply put starting a business when you're doing it. And an EIN can be, you can get that for many different reasons. You can get one if you have somebody working for you. You can get one for them. You can get one if you're doing a DBA, doing business as. You can get one. So there's a plethora of things. And the EIN, it is the social security number of the business. Go ahead and let them see the slide. It is the social security of the business. It is necessary. It is important. You will need it to transact business the right way, and you'll need it to build business credit. Number 5, prepare an operating agreement completely, meaning it need to be dated and signed. You want to make sure you have that operating agreement. It will govern how your business operates. It will show how things are distributed when they come in. It will show who owns what and all of those wonderful things. You want to make sure you can get that. You can get that draft up by a lawyer, or there's a ton of drafts online, and you can tweak it as you see fit and get a lawyer to look over it, or you can go to Inc. Authority that can help you, I think, to a certain extent for free. So go ahead and check that out. Number 6, you want to file your trademark. Especially you operating in certain kind of businesses, file your trademark. Get your stuff protected that nobody can't. You can't go viral and somebody come in and file trademark and stake your stuff and then sue you. Please, file your trademark. Number 7, to complete it out, open a bank account. Open a bank account, and I'm going to go a little bit deeper. Go to the next slide. Let me see if I have it here. Yes. You want to open a bank account, and you want to open a bank account for 4 things. So 4 types of bank account. Using this acronym, it's called STOP. We want 4. So the first one, S, is for savings. You want a bank account, you allocate savings. T is for taxes. No matter what you do, make sure you allocate the taxes because you want to have no problem with Uncle Sam later. O is for operations. So you want to make sure you have an account that is going to cover the operations. And then P is for profits, and then you can put profits there. So everything you can set up wonderfully. I would tell you, you can look at companies like Mercury Bank. You can go to, I think it's mercury.com. They will allow you, once you set up with them, you can have about 25 business accounts under your thing, opening them with a click. And you can assign different controls. It is an amazing, today, bank. And it's not brick and mortar. And it's completely free. And the stuff you are getting to do ACH and all kind of stuff, you're not going to get them free really like that anywhere else. So I'll check out Mercury Bank. And the next one I'll check out, it's called Relay. It's called Relay Bank. And they offer pretty much what Mercury offer. And then they have another high tier they call Relay Pro or something, where you can even do ACH directly to somebody's account same day, instantly. So you want to check that out, and both of those will allow you to open about 25 accounts if you need for free. So you'll be able to open these 4 accounts, and when the money come in, it's divvied up between these 4 accounts, and you can easily manage it. You'll be able to give your accountant access where they can transfer and steal your money, God forbid, but they'll be able to see everything, your bookkeepers and all of that different stuff, and you can give different employees different kind of access in that atmosphere. So those are 2 banks that I would tell you can check out, that they're not brick and mortar. I would tell you now to look at a brick and mortar bank, and I would go for a small bank or a credit union that you can build a personal relationship with, and you can deposit money in, even if you're transferring it out later and different stuff, just that you have a personal relationship, so you can have certain even business credit be extended. And in the area of business credit, you want to check out Tilful. I think it's called Tilful. Let me make sure I got the spelling right. Tillful. They can help you build business credit and also personal credit. So I just want to shoot that in there. And I told you about Credit Strong that can help you do the same when it comes to building business credit. And we will have a whole nother session where we'll talk about building business credit in the future, in the coming months, and we'll be able to go way more in depth. Let's go to the next slide. LLCs, I heard me talk about it. Business structure used to protect your personal assets. That's why you want to get a limited liability company. It's not limited liability corporation, it's limited liability company. You can have a single member LLC, and you can have multiple members LLC, and companies or other LLCs can own LLC. Conversation about LLCs, they're very vague, but most people just say, hey, start an LLC. Just make sure, I walked you through the process a while ago, the steps to set up an LLC properly, to set it up and structure it properly. I just walked you through those steps, and your operation agreement is going to discuss even how that LLC is ran. And an LLC, it is not a corporation. Again, it is not a corporation. A LLC is defined as a hybrid entity, because you can have a lot of LLCs that the IRS treats as a sole proprietorship if you do not change your tax filing with them and get S-corp taxation or something else. It will be taxed, as a sole proprietorship by default. So you want to make sure you set that up. And the best state just basically to set up an LLC would be your home state. If you're looking for different levels of protection, we're going to send you to places like Wyoming, Delaware. Wyoming, nobody will know who owns your LLC. It's a good thing, and that's a nice thing. So Wyoming, if you add, it adds a level of privacy. It's amazing for that reason. So we can cover that when we go in depth another time. Arizona is another nice state if you're looking at the fees that you need to file. It is not bad, and it doesn't require a reporting of annual report. So it's a nice state, but if you don't live in these states, you're gonna definitely need a registered agent. And even if you go this route, I would still have these LLCs own your domestic LLC in that state. So you would file this one first, then file your domestic LLC in your local state and have this one own it. So a lot of people won't even know who owns your LLC, and privacy, and it protects you, and that's key. Next slide. We went over this with some folks before. A nice state is Pennsylvania. If you're there, we're just showing you some of the filing fees for some of these states if you happen to be there, and what is commonly used when it comes to limited liability company and different variations, and the approval time and the processing time. If you're in the state of Florida like we are now in the Sunshine State, you will see on your screen that the filing fee, it's $1.25 if you do it yourself. And Inc. Authority, I believe they're called, they'll help you to do it for free, and you just pay the fee, and they'll make sure everything goes the right way. But in Florida, you got no privacy, like most states. So I can go up on the Florida website, and I'll see your home address if that's what you used when you were filing it. I'll see whomever filed it. I'll see your information. We don't want that. So get you a registered agent, or register in Wyoming or somewhere else first, and protect your information. Perks. Simply put, when you file in Florida, you can file in person or online, and it's really quick. That's one perk of filing in Florida. When I mean really quick, you can file online and have it in a matter of days. Average time is 13 to 15 days, but I can tell you that I've seen a lot of people got it a lot faster. In Florida, designation for LLCs, limited liability company, LLC, and L.L.C. Let's go to the next slide. We have another slide? All right. So that was just the basic fundamentals of getting your business structured the right way out the gate. We are going to go ahead and we're going to go ahead, and I want to answer a few questions. But here what? Let's go ahead and let's run through it real quick. Let's go ahead and run through the investment slide. I'm going to run through it real quick. Hold your business questions. We're going to address them. The first thing when you look at investment, I want you to understand that it's important that you don't put all your eggs in one basket. So you look at the screen and you see I'm talking about diversifying your portfolio. So when you're investing in things, you don't put all your money in one thing. These are just various things that you can have in your portfolio or the makeup of your basket. You can have stocks, you can have bonds, you can have peer-to-peer lending. Peer-to-peer lending, talk of things like Prosper and Lending Club and many others like that. You can be a hard money lender, and I'm throwing out some terms there, and I'll try to clarify some of them if we get a chance. If not, we will send them in the notes. You can invest in cryptocurrency, where everything is skating, and I know everybody, cryptocurrency is crazy, but if you notice, all your banks are open to it now. Goldman Sachs and all of these juggernauts in the investment world are now opening to allow you to invest in these things. Real estate, you can invest in real estate, and I will not separate real estate from real estate investment trust. One mean that you can physically buy real estate and own real estate. The other one mean that you can physically buy a company that own real estate. So they'll call it REITs, or real estate investment trust. So companies that would fall in that kind of category would be something like SPG. SPG is Simon Management Group. They own all the Mills malls. So Sawgrass Mills, Ontario Mills, Arizona Mills, and you'll see them. They own a plethora of mall. A Mills property up in Boca Raton, down in Dade where you have the falls. All of these are Simon property. They pay amazing dividends, healthy dividends, and right now their stock is actually close to its 52-week low. This is the best you have been able to buy it since the pandemic started and the stock market went down to, I would get some. I would get some. I think it's even less than $100. Amazing. So index funds, to put it simply without going crazy into it, an index fund, it's a fund that just has a lot of different eggs in the basket. So we can look at that. An ETF is pretty much the similar things. They have a little differentiation. And if I don't get to break it down, you'll see it in the notes if you opted to get the notes. So you'll be able to look at ETFs or index funds, and that will often be a company that will own several different things. So they will already have a diverse portfolio. So like Berkshire Hathaway, Warren Buffett Company, you could look at them and you can look at them in a limelight, something similar to that. Because they own a variety of things. But then you have the S&P 500, which owns the 500 top companies in America. So you can get a little piece of the pie. So I would definitely look in that area. Next slide. Oh, glory. Now, as I'm wrapping up in the investment area and even the closing out area, there are some things that I just wanted to share. It is important that we learn the laws that govern wealth. I can't go in depth today, and that's a whole different teaching. But if you look at your screen, you will see something that you know to be true, even if you have never seen it before in Scripture. Just as the rich rule the poor, so the borrower is servant to the lender. We know it to be true. You know how, and I got to pay my mortgage, I got to pay my card note. Just as the rich rule over the poor, so the borrower is servant to the lender. We need to know it, biblical truths. Owe nothing to anybody. Now, except for the obligation to love one another. If you love your neighbor, you will fulfill the requirement of God's law. When you look at this, it's trying to tell you to don't carry unnecessary debt. In communities that's not wealthy, people look at debt just as a bad thing. We can't have an in-depth conversation today, but I'll say it like this. Only look at acquiring debt when you're using the debt to acquire assets. If the debt is a result of you buying liabilities, don't do it. If you're going to borrow money to buy a rental property, to start a business, to do something that will create passive income, that's the only time you build debt. That's the only time you build debt. I don't want to scare anybody, because I want everybody to come back, so I don't want to tell you how your house is your biggest liability. Next slide. Give and you will receive. You can read the scripture for yourself, pressed down, shaken together. Honor the Lord with your wealth, with the best part of everything you produce. We are speaking of laws on giving. If you notice that the wealthy are the wealthy, all of them have charities, foundations, and they understand the principles that govern wealth. You give freely and it's going to come back to you. They also understand the mysteries that now is becoming to reality, where even giving, they give you tax breaks heavily and you can write off a plethora of things. Next slide. All must give as they are able. We're still talking about giving and being a blessing. We could go into a lot of different things. I don't want to go in depth, but I want you to read the slides. I want you to take notes of the scripture. Deuteronomy 16 verse 17. Luke 21, 1 to 4. Next slide. On greed. Yes, the slide is black. It got white writing, and it is that way because we're trying to grab your attention a little bit different. On greed. For the love of money is the root of all kinds of evil. And some people craving money have wandered from the true faith, pierced themselves with many swords. But you, Timothy, are a man of God, so run from all these evil things, pursue righteousness and a godly life, along with faith, love, perseverance, and gentleness. You're looking at this scripture, and I want you to look at it, because oftentimes there is a misconception. The love of money is talking about the money being your God, the money ruling you, the money driving you. You can write this in the chat for me. Let me make sure I word it right. I'm trying to thought. Money is a terrible master, but is an excellent servant. Always remember, money, it is a terrible master, but it is an excellent servant. Money is a terrible master, but it's an excellent servant. So if you have the money ruling you, you will sell out your brother, your sister, your mama, your daddy. You will sell out people you know in all your life. They always showed up for you. You will rob them because they got some money if money is driving you. It can't be the money that's driving you. It got to be something else. It got to be that I want to be blessing to everybody that's connected to me. It got to be that I don't want to have to stress out to take care of the kids I'm blessed with, to make sure I can buy my mom something nice, to make sure I can provide as a man, as a woman. It got to be something else. But don't let the money be what's driving you, because you will never get enough. And you will sell out everybody to get it, and that's what we're really talking about when it comes to greed. Next slide. Don't love money. Be satisfied with what you have, for God has said, I will not fail you. I will never abandon you. So even in the process of accumulating wealth, it's important that you're satisfied. Then he said, beware, guard against every kind of greed. Life is not measured by how much you own. Next slide. And God will generously provide all your needs. Then you will always have everything you need and plenty left over to share. Keep that slide up here. I want them to look at it, because we're getting ready to wrap up, and I'm just going to answer any little questions you guys have. But this scripture here, when you look at it, I want you to know that it's not talking about you being just enough and you being in lack. But God has given you a gift. God has given you something. And that something God has created and released in you, and if you nourish the idea that God gave you, it will open doors. It will allow you to provide the way you need to provide. It was an idea that created the iPad. It was an idea that created the iPhone. It was an idea that took us from 2007 to a leap that we never thought we would be at when you look at the technological marvel. It was an idea. And sometimes you have these ideas and we're thinking, and we allow people to discourage us. But that idea is meant to be able to make provision without you having to rob anybody and do business terrible and rob people's stuff and jack people or whatever. That's what it's saying. So use what you have and create the wealth. Let me get to the next slide. And this same God who takes care of me will supply all your needs from his glorious riches, which have been given to us in Christ Jesus. The blessing of the Lord makes a person rich, and he add no sorrows. I need you to take this scripture. I need you to write it at the top of your business plan. And I need you to write it in that book you're writing your business ideas. Proverbs 10:22. The blessings of the Lord makes a person rich, and he adds no sorrows. I need you to understand that sometimes we see people have all the money and they have no peace. And they tell you, God, 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 God. The blessings of the Lord, when it makes you rich, it will add no sorrows. Next slide, please. But blessed are those who trust in the Lord and made the Lord their hope and confidence. They are like trees planted along a riverbank with roots that reach deep into the water. Such trees are not bothered by the heat or worry, by long months or drought. Their leaves stay green and they never stop producing. The provisions of the Lord. Next slide. We're closing out, and I want you to look at this slide. I want you to look at it as we're talking about investing. We talked about credit, we talked about business, and we're closing out with investing. Look at this slide on your screen. Just look at this slide. Streams of income. Earned income is when we go and we work physically. It is the highest taxed income. Rental income, dividend income, royalties, business profit, interest, and capital gains are all taxed lower, and they all require less physical work. Dividends can come from real estate investment trusts. Royalties can come from books and songs and poems and different things like that. Business profits can come from being a silent investor or owning a business. Interest can come from yielding interest in the form from real estate investment trust, from peer-to-peer lending, and different things like that. Or hard money lending. Capital gains can come from investing in the stock market, buying low, selling high, buying a house, buying low, selling high, flipping properties. Capital gain. Next slide. We have a next slide? We're trying to, I went over it, so we're gonna go through them. You take a look at this slide, it's just kind of giving you some ideas of where you could go. Again, I'm not giving you recommendations, I'm just giving you some knowledge in the areas of certain equipment, certain things, and things you can look at, and great examples. Let's go through the next slide. It's talking about how you could make a list, how you could write down things you already use. You can look to invest in things like that. Starbucks, you already buying them. You look at companies, you own Apple stuff or Google stuff, you start to look to invest in them. You always shopping on Amazon. You're starting to look into investing in these things. And you can look into ETFs and index funds and other things like that I've mentioned. Next slide. I won't get into risk tolerance, but I'm going to go through the slides as we close out, and we're going to send this, but it's talking about the level of managing risk and diversifying your portfolio, help to do with that. Next slide. Okay, so we are closing out. We're going to address your questions. So if you have any questions, it's the best time to not miss out on your question being answered, drop them in the group. We're getting ready to wrap up. The question came in about if you can change your address on your business to a virtual address from your personal. Yes, you can. And I would tell you to do that as soon as possible. And when I mean a virtual address, if you go up and you type it in Google, you can look up virtual business address. It's often a high-rise building, and they have office space and different things, and they'll even accept your mail. So it gives you a level of professionalism and a level of security. So yes, you can. Next question. Okay, the question is if you need a DUNS number in addition to an EIN when it comes to doing business in the way of billing credit and certain things. Now, usually you used to have to pay them a ton of money and you used to have to buy a DUNS number. You don't even got to request it anymore. 9 times out of 10, if you register your business correctly, you're going to get a signed one, and you can go on their website and get it. Oftentimes, people will tell you traditionally, you got to go through that avenue to build business credit. That is not the way anymore. So you can build business credit and have wonderful business credit with never actually using your DUNS number. So that's just good information to even have and to know. But yes, you should get one. Chances are you register your business right, you can go on their website and get it. If you're setting up certain business accounts with Apple, when it comes to distributing apps or music, you're going to require to have one. Certain business relationships will require you to have one when it comes to just showing that your company is in fact real and real structured company. But you also want to go on there and make sure your information is right, and you want to make sure your business doesn't get typecast as in placed in high-risk categories. So even the part of naming of your business, you don't want to name your business and drop financials on it or credit or nothing, pawn shop or nothing weird like that, because they're going to put you in a high risk, and it's going to be heavy when it comes to getting loans. It's going to be hard. So in most cases, you want to have a barber shop, a nail salon. You want to have, listen, create a holding company or create a nice business name and do a DBA for your shop. Any other questions? Okay, the question is it wise to take equity out of my house to purchase rental property? I think that is an amazing question. And I will say this. Do not do an equity loan, period. So I want to get that off the table. No equity loan. It is a wise decision to access equity in your house to buy rental property. That is the only time your house, in my opinion, stop being a liability and become an asset. And people will stone me to death, but if your job goes tomorrow, your worry will be how you're going to pay your mortgage. And that tells me right off the back, it is a liability. As a matter of fact, it happens to be your biggest liability. Chances are it might be double your car payment. So the best way now is that you have equity in your house, is to access it. A matter of fact, right now where the market is, and a lot of properties ain't showing the real price, I'm going to be honest, is the best time to get what I would say a HELOC, an equity line of credit. A home equity line of credit, and you can get that. They have Avon, they have, I think it's called Finder or Fender. They have a lot of different companies that do it a non-traditional way, and they have regular banks that do it traditional way. But a lot of the non-traditional ways is better options now. I think they're called Avon. They literally will send you a card. It's a credit card, and it will be the equity line, and it will be like a 4% or something based on your credit, and you can use that. And if you need the cash directly, and they'll give you that line. I think it's about maybe 15 years or something, but you can look deeper. Most equity line of credit will be for about 15, so it'll be 15-20. Or be 10-20. So you'll have access to it for 10 years, and then you'll be able to pay it back, pay it completely off for the next 10. Or you'd have access for 15, and you can pay it off for the whole 20. Navy is one of the best banks I see in that arena, as well as it's called Avon. I think I will send it in the notes if you opt in for the notes. I think they're called Assurant Credit Union or something of that sort, Assurant Credit Union, and they is the best. They're in Chicago, and you can sign up. They're the best when it comes to mortgages and home equity line of credit. They're awesome in that category. Navy is awesome as well, and most credit unions are awesome. They'll give you a better rate, but you want to get a line of credit, not a equity loan, and I would access that ASAP as soon as you can before things got pulled back, because you're going to have access to that capital for the next at least 10 to 15 years, depending on your terms. And some of them might have a small annual fee, but you only pay interest on the money you use. But with an equity loan, you're going to pay interest on everything, because they're going to give you a lump sum, so you don't want to do that. Next question. Okay, I see it as well. Okay, so the question is, because I realize that the way how the system is set up, I'm hearing the question, you guys are not. The question is in regards to, I have an ice cream business in Tampa, Florida, and it's an LLC in Florida. Can I have another LLC out of the state of Florida that own my LLC? You mentioned that the state of Wyoming, no one would know who owns the business. That's what the question comes from. First thing, yes. And would I recommend it? Yes. Would I say it's necessary? Yes. So now the first thing I would say is this. I would have at least 3 LLCs once I enter the realm of owning business and stuff. Rental property, have an LLC, and depend if you have them in multiple states, I'll have an LLC in the state and have the parent LLC or the holding company own those LLCs in whatever states. And I would put that in a state like Wyoming, because no one will know who owns it. They can't just go on the website and it's going to show your name or your personal information. So it offers wonderful protection, and it does foreign and domestic protection. So it's really good to have a local LLC and have a foreign LLC outside of the state, so using something like Wyoming. And then we can get really deep, and we can talk about now having that Wyoming LLC being owned by a irrevocable trust. And some of the best states, Wyoming happened to be one, but I think South Dakota reigns supreme. South Dakota is one of the best states to have a trust set up, a irrevocable trust. So your irrevocable trust would own your holding LLC that's in Wyoming, and then that LLC would own all your other businesses. And then we go and now we talk how your LLC would have S-Corp taxation, and that taxation means that now it would pass through to your trust. The interesting thing is trust pays, for the most part, no taxes, certain things with profits, but it protects your assets. And now we'll go into the realm of what God released in Genesis, when God kind of tell you that, hey, you need to oversee. So we'll go back into the realm which you'll see wealthy people do, or you'll hear the term control everything and own nothing. I don't want you to get scared, but what happened now is your trust will own your assets. You will be the beneficiary of the trust, and you'll be able to control your assets, but you won't be the owner. Your trust will own it. So you won't get taxed that way, but also from a lot of different things, it won't be able to access those resources if you get sued. You know, your trust owns it. So I sue you, your trust owns the place. You don't own it. You control it. And that goes into setting up the bank accounts, right? So that the LLC owns that, and you're a manager. So none of them owning things. You're a manager. You manage, you handle it. Your trust owns everything. And we can do it. If you're interested, shoot the emails, shoot the DMs. We will do something just on how to help set up that stuff and how to go to a trust lawyer that can really set it up the right way and just send you some resources of people you can reach out to set up things like that the right way. So your trust, irrevocable trust, and we can go real deep where you can have it set up from overseas that own the local trust, that owns the LLC, it's a whole lot of interesting things. But it will protect your assets, and that is important, and it will help you save, or let me say it this way. It will help you embrace the advantages that exist so you don't overpay in taxes. Business is a person. Businesses are people. That's how the government look at them. And they're taxed lower. If they're set up and handled right, they're taxed lower than the regular individual. So everybody, hear me and hear me clear. Everybody need to mind their own business. Everybody. So you got an idea, you need to start a business, a tutoring business, a house booking service business, Airbnb business, and a lot of these things can be on autopilot, and we can do Zooms to even have special guests to even teach in-depthly on those things. So I got all your questions. Any last questions? It's 6:10. And I said 6 o'clock, and I asked for grace that we could answer questions, but you're here and we want to answer your questions. How long would you need to have business credit established before using it to finance a vehicle? All right, that is a tricky question. Most people will tell you 24 months or longer. The honest truth is 3 to 6 months, if you do it right. If you do it right, I'll say 3 to 6 months. And now, the business-friendly organizations that you would look at would be Tesla, BMW, Mercedes. Those are the ones I'm sure of right off of the top of my head. There's others, but I'm Ford. I'm sure of right off of the top of my head. They are amazing when it comes to that. And when you go to have your conversation, you want to talk to corporate. We're dealing with corporate financing, corporate lease. And oftentimes you do it right. You can, when you turn in your vehicle, you can get a check. The pandemic was printing checks for businesses that was turning in vehicles when it was time. People was getting 10, 15 grand. And you want to understand that leasing a car for a business, you can get the tax credit. Your tax guy, your tax person will work it out right. If you get the vehicle that's over a certain amount of pounds, I think it's 6,500 pounds, and your tax guy can get you a certain amount of credit off in the first year for the whole vehicle, even if it's leased. So you want to, I'm not a tax professional, just trying to give you information. So you want to talk to your tax guy. But when you lease the vehicle, you're also can write off a portion of your lease monthly payments of your taxes. So you want to look into that. Now, say you own a business, your business is set up, but you didn't get the car through your business. You can actually get a lease agreement set up between your personal car and your business, because you're using it for business purposes, where your business actually leased the car from you. And that's a whole nother thing. But you can do that, and that's the way to get around it if you already got the car with your personal credit. Any other questions? The question is, would you say it's a good time to purchase rental property? It is always a good time to purchase rental property. Like, what's his name? MG, the real estate guy. I think that's his MG, the real estate guy. I think he's on Facebook. Amazing guy. Got a book called, I think it's called Hackonomics. We teach you house hacking and all kind of stuff. It is a good time to purchase real estate property. It is always a good time. Now I'll say this. You need to research the market you're buying it in. Oftentimes people look to buy real estate property for investment purposes, and they're buying it where they are. And the market that they're in might not be a renter's market. It might not be the best market to buy that kind of property in, and you will shoot yourself in the foot. So we will tell you right now, you don't want to do that. You just don't want to do that. Some people will tell you they use the 1% rule, where 1% of the cost for the building, the mortgage shouldn't span more than 1%. So if you pay $100,000, you shouldn't be paying mortgage on that building for more than $1,000. And you use that math to go on and on, because you're going to end up starting to pay the mortgage and the rent can't even cover. So if you can't get the rent for more than $1,000 on a $100,000 property, it's not worth it. And there's a whole lot of other extra stuff that goes into that. But at the very minimum, the property costs $250,000, and the renting market is saying it's a $1,500 a month rental. You are in the deficit instantly without even looking into anything else, just using the 1% rule. So you want to be careful of that. Now, if you enter the arena of Airbnb and you look at the Airbnb market and you study and you got the analytics, you can find that the Airbnb can easily net $6,500, $7,500, probably in that same market. And now you are good, because you're well over that 1%. And that becomes now a good investment. So you want to research those things and look into those things in depthly. But yes, it is always a good time to buy rental property. Maybe just not where you're living. So you want to look at places outside. And I'll tell you this, you want to look at it as passive income. So stop looking at you controlling your rental property and taking care of these folks. Start looking and going to the approach of paying a management company. If they research management companies, see how good they do for others, and if they charging 7%, you give them 10. You offer them 10, and you tell them this is how you can earn the extra 3. You make sure that you respond quick to my people when they need something fixed, a pipe fix, or this fix, or that, or whatever, and you let them handle that day-to-day whatever when it comes to your rental properties. And yes, it's going to cost you 10% of what you have coming in, but you know what? That 10% just bought you a peace of mind, and it buy you not getting out of your bed 2 o'clock or getting out of crazy hours or getting crazy calls about things happening at your rental property, because you have someone you're paying that you can get your time back. And about building wealth, handling wealth right, is that you can have your time back. So we can come to Bible study, we can meet with family easy, we can be in worship easy, and we don't got to stress about some things. Hey, we can go on vacations and don't feel guilty because the boss is going to call or whatever. So it's important for everybody to mind their own business, in the sense that, yes, you work in corporate, but launch something, start some kind of business, because you can hire your kid, and that's a whole nother thing, and you can pay them $12,500 a year. You can put that in a Roth IRA, doing $500 a month, doing the $6,000 contribution, and they will inherit that. They will take that over at age 18, and when retirement age comes, they're not going to pay 1 penny in taxes on their Roth IRA, and that is just the game. That is just passing down generational wealth. So yes, please look at starting a business for whatever. Could be consulting. It could be some kind of nursing. It could be some kind of home health aid. It could be some kind of tutoring. Set it up right. And we're here to help. We're here, I'm Pastor JJ. I'm here at City Mission, 3033 Northwest 7th Avenue. We have service 10 a.m. tomorrow. We're continuing our Armed and Dangerous 2022, and we want you to come. You can be in the house. We're under the dynamic theme, The Art of War. Our very own youth minister that's over our impact and young adult ministry. Go ahead and do that zoom out that they can see the poster behind me. Yes, that they can see, yes, our very own youth minister will be, you can keep it up there, they can see that information, will be kicking off. She will be ministering in the morning, and we're expecting a dynamic word, and then we're going to have dinner after. So you come fellowship, don't worry, we're going to feed you. We're not going to let you get too fat because we want you to, not to be tired out in the evening. And at 4 p.m., we are going to have our closing out session, and we're expecting an amazing move of God. We have a guest psalmist coming as well as our praise and worship team, and we're expecting an amazing move. We have Light Brigade, Alonzo Grandison. He's coming all the way from Colton, California, under the leadership of Reverend Dice over there, and we're expecting a wonderful move of God. So we're inviting you to come out and worship with us. And show up, and we're inviting you to be a blessing, because conferences, they cost a little something. So please be a blessing to the house in the area, and you can give in many different ways, and we're going to share those information throughout the service tomorrow, as well as you can see some little stuff now. If you get our church app, City Mission Church, in all app stores, you can give through that, and you can text to give, and we're going to share all that information that you can have it. So we're getting ready to close out. I don't want to skip anybody question last minute. I got 5 minutes. We'll be closed out at 6:25. So if there's a question, I'll cover it real quick that we can close out and we can wrap up. We want to thank you for joining us online, physically in the house, on the various platforms. Some people are on the direct link. Some people are using YouTube. Some people are using Facebook. We appreciate it. We hope you glean some knowledge. We hope you grow in understanding that wisdom can protest when time comes. Any other question, Chris? No other question. All right, so I think we have covered all the questions, and I'm just checking my phone to make sure we didn't. All right, we good? We covered all the questions, and if you have other questions and stuff, you can share them in the DM. When we send out the emails, we may be able to address it, or it might be addressed in the notes. We're going to send you some rich notes about credit, about business and setting up business, about investing, and some other things. We'll send you some notes, and we look forward to connecting with you in this form and fashion again. Maybe next time we can have something physical. We can do a little workshop. You can be physically in here, and we can even help you work some things out with your credit if it needs to be fixed. If you need to physically understand and navigate some stuff. Hey, if you want to launch a business, maybe we'll do a session where we'll do just business setup, and you can come in here and we can help you navigate that, just giving you some information, and you can walk through that, because we're all about sharing, educating you, that you can grow in knowledge and understanding, that wisdom will be able to protest. And when wisdom protests, embrace it. So I want to thank you again. I'm gracious, I'm happy, I'm excited that you came this way. I'm really thankful. I don't think I'm missing anything. I think we've covered everything. So tomorrow we're inviting you to come join us in the house 10 a.m. and again at 4 p.m. And we are making space. So if you want to come and kick it with us for 10 a.m., you want to stay over, you'll get dinner, and we're going to hang out. We're going to be here. You can chop it up with the pastors. We can even have some of this more conversation if you got some more questions. So come on down, join with us. And then at 4 p.m., promptly, we're kicking off the closeout. And we're expecting an amazing worship service. And we're expecting a dynamic word at 10 a.m. in the morning in that service, and at 4 p.m. in the closeout service. Please, please come and worship with us. So we're going to go ahead and just run through the slides of everything that's happening. You can see the stuff that's happening at our church. So we're going to go ahead and put that up on your screen so you can see that normal things. We have our conference coming up tomorrow. You can follow us on social media, and it's City Mission Miami on Facebook, Instagram, and you can find us the same way on YouTube. You can download our app on Mondays, and on Thursdays, we have 7:30 prayer. It's normally half an hour to 45 minutes, and we come together as a family. Download our app, City Mission Church, all platforms. Also have it on Roku TV, Apple TV. Watch the service live, give, have reading plans, all of that. On Wednesdays, Bible study. Jump in and get into Bible study, Deeper Life. We have it on Zoom, and we're normally in here, and we let you know when. So I just wanted to run through those things. And again, I thank you, I thank you, I thank you. This was the Financial Literacy Encounter, and we are grateful that you stopped by this way, and we look forward to seeing you soon. I hope it's tomorrow. I hope it's tomorrow. All right, so again, thank you. God bless. So as we're closing out, let me just breathe a fresh word of prayer. Lord, we ask that the ones that came and are in the temple, we ask that you guide them, protect them on their way home. Lord, we pray even now that the information that was shared, that it will be a blessing unto your people, Lord. We pray that clarity went forth. And we give you all the glory. We ask you even now to step and go into tomorrow and prepare everything for your glory, for your name's sake, and have your matchless name way, with your matchless name. Just have your way, God. We give you all the glory, the honor, and the praise in the matchless name of Jesus. And we say amen and amen. Thank you again, and God bless. Thank you, thank you, thank you, thank you.